So Jessica, Stefan, floor's yours.
Great.
Thank you very much.
Thank you. So again, thank you so much for inviting us to come here to Riga. This is both for me and Jessica the first time to the Baltics. For me, I think you've been to Tallinn before, but it's been great, and it's been really fun to see all the presentations and the energy and the things you're creating and have already kind of put together. And thanks for the organizers. It's been extremely well organized. So when we got this call and asked if we could come and present here, we're obviously no experts on the Baltic market. We are experts on the Swedish market, and we are, I would say, expert on the US market. So we thought, what would be good to talk about? So we suggested we'll talk about our experiences with Volvo cars and the Polestar IPOs, and they're two separate IPOs and have their own different complexities. But when you kind of boil it down to the kind of the basics, it's really no different than any other IPO. So with further ado, I wanted to show you a video that actually was an ad that was shown at the Super Bowl. For you that's interested in American football, it's the biggest TV event of the year in the US. And Polestar did a really good ad in the second quarter, and I thought that'd be a good introduction to this case study. Great. So Jessica, you want to tell them a little bit about the transaction, the size. These were all the huge transactions, the biggest transaction in Sweden. And why don't you just tell us a little bit about the two transactions and the reason they were so interrelated?
Absolutely. Nice to see you, everyone. Coming here talking about the life before listing, that obviously should involve preparing for the life after listing. We thought it would be very good to link that to quite large transactions that we had the privilege to advise on. The first of those is the acquisition that was done by the special purpose acquisition company Geer Guggenheim in September last year, when they acquired Polestar, indicating an enterprise value of over $20 billion. This was the second largest SPAC transaction ever. I think the rest of the numbers probably speaks for themselves, but the second transaction, very much linked to the Polestar transaction, was the listing of Volvo cars after many years of preparation in October, so a month after the merger between Geer Guggenheim and Polestar. These two transactions are obviously very linked because of the ownership in that Volvo owns 49% of Polestar. So marking that by that transaction, the SPAC transaction, we were marking a value of over 20 billion for Polestar, which was obviously driving the valuation of Volvo when they listed a month later. So very strategic transaction and sequence of events.
Yeah, and so obviously when you have a 49% stake in something you're not consolidating, and that when it has such a tremendous value, the timing of these two transactions became extremely important, and that's part of the reason why they went down a SPAC route, because the SPAC route is a little bit different. I'm not sure if you're super familiar with SPACs, but one of the key differences between a SPAC and a normal IPO is that once a merger agreement has been signed, which usually happens a couple of months before the actual trading starts with the combined company, you announce the value of the transaction. So once that was announced, that was essentially kind of the critical moment for the Volvo Cars IPO to progress, because then that way analysts, et cetera, could come up with a more precise valuation of Volvo Cars. So in this particular transaction, starting with Polestar, there was a couple of choices to be made. Should we go down a traditional IPO route, or should we go down a SPAC or a de-SPAC? So the SPAC is essentially already a public company, essentially an empty shell with a bunch of money, effectively, that's already listed, that goes out and looks for targets. And the key difference here and the key driver in this particular transaction was really the timing of the valuation and the certainty of the valuation. Being able to announce a value versus a traditional IPO, you wouldn't necessarily know that until the first day of trading, effectively. So when you compare and contrast a traditional IPO versus a SPAC, a traditional IPO typically takes a little longer. Certainly that's true in the US. What we've seen in Europe and in this transaction as well, I'd say in the European setting, they take about the same amount of time. And the reason why they take about the same amount of time, it takes longer typically for a European company to come up with US audited financial statements than for a US company. The valuation on a traditional IPO, effectively the first day of trading, versus a SPAC, it once the merger agreement is signed, so you know that up much earlier. In a traditional IPO, there's a higher amount of deal uncertainty. Me and Jessica, we work on a lot of IPO preparedness projects and so forth, and many of those projects never lead to an IPO. A lot of them pause, cancels, they choose different capital routes. So there's much more deal uncertainty in a traditional IPO versus a SPAC. Once you have an LOI and a merger agreement with a SPAC, there's a pretty high level of deal certainty, which was very important in this transaction given the connection to Volvo Cars. The other thing with a SPAC, you typically have a capital infusion through a pipe. So if you need capital prior to the actual IPO happening, a SPAC usually is a more attractive route. And in this particular transaction, there was also a pipe. So Polestar got some capital prior to the start of the transaction. The other interesting aspect in this was there's a slightly different approach, I'd say, between the US and Sweden. And I would say that the Swedish approach is quite similar to many other exchanges. The Swedish approach or the European approach, it's more of a self-regulated process. The regulator plays a role, but a lot of the rules and the processes is really developed by the stakeholders, the exchange, versus the US have taken a very different approach. There, the regulator essentially leads the process. The exchange and the stakeholders participate, but don't necessarily set the key rules. And it's the SEC really in the US that kind of drives that process. So we had to kind of take that into consideration as we were working on both transactions at the same time. And that also kind of drove a little bit the decision to put Polestar in a US context versus listing it in Sweden, because the requirements and the philosophy is a little bit different between those two markets. And that's true in I think here in the Baltics as well. The European approach is you kind of need to be ready to be listed before you can actually get listed. And to give you an example, they require essentially internal control, governance, and some of the things that's required to be in place. And typically, at least 3 months, you should be able to demonstrate that you have it in place, it's working, etc. Versus the US approach is actually, in some respect, a little bit more flexible, and that seems a bit strange, given the US is usually very strict about a lot of things. But the US have kind of taken a slightly different tact in the sense that they understand that, especially startup companies, may not necessarily have all the processes fully in place, that they're working on it, it's very fast-paced. So they've gone down more of the disclosure route. So they say, okay, well, if certain things from an internal controls or governance perspective is not in place, that doesn't necessarily prevent you from listing, as long as you disclose it. And for you of you that have read US prospectus, you know the number of risk factors and the language around material weakness of internal control, etc. It's much heavier, if you will, than what you typically see in a European prospectus. So Polestar being a very relatively new company and also very interrelated with Volvo cars in terms of back office function, etc. It would probably be, I'd say, maybe not impossible, but very, very difficult to list in Sweden, because the Swedish rules would have required much more separation, much more on a standalone basis, having everything in place prior to the IPO, versus in the US, didn't necessarily have all those requirements as long as they disclosed it. So when you look at their prospectus, related party disclosures is extremely extensive, talking about the interrelationship with Volvo Cars and the Geely group, which they ultimately all kind of roll up into. And that would not have been possible in a European context. So going to the US from a Polestar perspective was the right choice, because it made them able to do it much, much faster, and that was clearly a contingency then for Volvo being able to list in Sweden subsequent to the merger agreement being announced.
But it's worth mentioning the fact that the first day of trading of of Polestar in the US was in June. So
Right.
that was the length of the SEC evaluation process from the signed merger agreement in September till June.
So going back to, this consumed Jessica and my life for a good 2 years. We spent a tremendous amount of time, and not only us, we had an enormous team from KPMG working on this, and a number of other stakeholders, lawyers, the auditors, etc., as well as management. But when you kind of boiled it down to the requirements were very, very similar to what it would be here, what it is in Sweden versus in the US. And it kind of boils down to kind of 8 kind of major areas that, as an issue, you need to think about and you need to work on. So I'll let Jessica kind of give you kind of a quick overview of kind of those kind of key areas and kind of what you need to think about in terms of timing and focus around them.
But surely, key to any listed company would have a proper risk management process in place. I mean, you will have to disclose your top risks to any investor and make sure you have those managed properly. Internal control system in the US, it would be SOX. Sweden is actually quite close to SOX, even though it's not actual SOX. And this type of preparations would typically take quite long time, and that's where you should start. Capabilities to handle external information, set up an IR function, internal information, who has access to what information security, financial planning, budgeting, obviously key to a listed company that disclose financial targets to the market and need to be able to communicate if there are any deviations to where they think they were heading. Financial reporting, robust closing process, IFRS, competence, the quality of the reports, the pace of or how fast you can actually produce these reports. Cash.
Yeah, and in terms of the timing, a lot of these things, when we talk to our clients, we tell them, think about this at an early stage, because some of these things take a bit of time to implement, and some of these things you can wait a bit with, like board, for example, board composition, etc. That you can do that quite late in the process. But really start thinking about it, and that will, if you kind of start to think about this 1 or 2 or 3 years ahead of time, then once you actually decide to pursue this type of approach, you're in so much better shape, and the whole process goes a whole lot faster. So in terms of key takeaways, from our perspective, for potential issuers, plan early, identify your weak spots, don't try to hide them, work on your weak spots relatively early and identify them, and work with your advisors and your auditors, etc., to start addressing them and your lawyers. While there are differences in requirements between various exchanges, when you actually boil it down to the basics, they're effectively all the same. There are variances, but they're very, very similar. And then consider and be open to alternative capital routes. When we worked with Volvo and Polestar, there were a whole host of options that was being looked at, and that's common in a lot of these transactions. That's usually, the plan A is usually not where you end a lot of times. You usually end up in a different space, and it's good to have that mindset that, be open to alternatives, because there are factors that you're outside of your control, etc., that plays a role in these types of transactions. And work on your equity story, and enter the IPO process in a position of strength. Have as strong of a balance sheet or performance as you can, because that will just help the process tremendously. With that, we'll open up for some questions.
You missed one thing, and that is, how is life after the IPO then? Because this session is about before and after.
Yeah,
have you got 30 seconds to share that with us?
And I think in terms of the life of after the IPO, the 8 areas we talked about, if you do those right, then the life after the IPO will be smooth. If you take shortcuts in these 8 areas, the life after the IPO can be very rocky. And the markets, I always tell people, it's really, the game really starts the first day of trading. That's when it really starts. And markets going to be very unforgiving if you've overpromised, can't deliver financials, etc. But if you do these 8 areas in a comprehensive way, life after IPO is actually pretty good.
A recipe for success.
Yeah.
Jessica, Stefan, thank you very much.
Great. Thank you.
And safe journey
Yeah.
back. Thanks for coming.
Thank you very much.
Thank you.
Thank you.
Please.